Alright guys, welcome back to another video. Today I want to break down swing trading strategy on my computer, and maybe you can nitpick this strategy apart and apply certain indicators to your current swing trading strategy, and if not, try this whole entire swing trading strategy to maybe increase your chances of profitability in the stock market. Let's get into the video. Alright guys, so now that we have Thinkorswim pulled up, I'm basically going to show you what indicators I use for my swing trading strategy. So sometimes I do a couple day trades, and sometimes mostly I do swing trades. So swing trades, you want to look at the bigger picture rather than a shorter time frame. So in this case, I have the 2-year 1-day chart pulled up here, but I usually look at the 1-year 1-day chart for swing trading. Maybe occasionally I fiddle around with the month time frame, but most of the time 1-year 1-day to get a general sense of price movement and price direction from 1 year's worth of data. So basically here we're analyzing Snap. Like I said, this is a 2-year 1-day chart. I want to show you so these lines that you see here, so the red line, the blue line, and the green line, those are called simple moving averages. You can use an exponential moving average, but I use simple moving averages. That's just the way I've been taught. So I use those, and now I have them color coded, and they have different values. So the green one you see right here is a 20-day simple moving average. Now what does that mean? A 20-day simple moving average basically takes 20 days of previous price data and averages it out and plots the point basically right where it is right now, right there. Now we have the 50-day simple moving average. It basically does the same thing. It calculates 50 days, calculates the average of 50 days of past price data and plots a point right there. And 200-day simple moving average, which is the red one, basically the same thing as the other two. So as you can see, the 20-day, which is the green line here, simple SMA line, is basically always a lot closer to the price action as we see here. So price goes down, whereas the simple moving average, it's above it, and a lot closer than the 50 and the 200-day. As we uptrend, you see across on the simple moving averages, and again you see the 20-day closest. Now there's a reason why the 20-day is closest to price chart. Not only just because we're dealing with a shorter time frame, so it moves as the price moves a lot closer. So as we go farther out into in time, we calculate more days of data. This SMA line is now going to fluctuate a little like away from the price action. So I hope you understand that, because that is a good thing to know. So those are the indicators I use. So the 200-day SMA, 50-day SMA, and the 20-day SMA, and looking probably at a 2-year 1-day chart or the 1-year chart. So another indicator I use for swing trading is the RSI, the Relative Strength Index. Now I have that placed right on top of the MACD. We'll get into the MACD a little bit later. So basically, the Relative Strength Index basically shows you if a stock is overbought or oversold. So a stock would be considered oversold if it's beneath 30 with the parameters that I've applied. Now you can change these parameters in settings depending on the broker that you have. This is the Thinkorswim platform, so if we have the same settings, I'll do a video on how to change the parameters a little later. But basically, if it's above 70, it's overbought. So what happens when something's overbought? Prices tend to correct. They tend to come right back down, maybe touch an average where the simple moving averages are, and then fluctuate from there. Now, the MACD. The MACD is an indicator I like to use. It shows me if momentum is increasing or decreasing. And the MACD stands for Moving Average Convergence Divergence. Now, what I look for in the MACD, I basically look for where there's price divergence, or trend divergence. So what I mean by divergence is basically the opposite. So in this point here, I'll point out for this example, you see this trend line is decreasing right at those bottom points before the reversal happens right here, right? But if we look at the MACD and we align our cursor, we see that this is actually the opposite. Our trend line is increasing, showing signs that momentum is going up to the upside, obviously, and price action is more likely to increase as momentum and divergence starts to wind out. And where you want to look for divergence is usually at the bottom of a price chart. So basically, let's say you've been looking at Snap, and this is all the data we have from this point to the past, all the way in the back. So we can tend to basically analyze here that this stock is due for a reversal. We've probably hit a bottom, and now a lot of newbies would probably go into a bad trade, because when you're trying to find a bottom for a stock, it can get very difficult, as prices will then continue to go down, and then you're just losing money, because if you're long on the stock. But that's besides the point. Now, of course, the MACD, the RSI, and all of these simple moving averages should be used together to give you a better picture of where future price action will end up at. Will it increase or decrease in price? And not just go by simple moving averages and disregard all the other technical indicators, like past support and resistance lines. So I also like to apply support and resistance lines. I'm not going to show you exactly how to identify support and resistance in this video, but in short, I would see where prices usually tend to get rejected and not go higher than that certain price. And then for support, I would look at where prices tend to get rejected and not go below that certain price chart or trend line, in a sense. So that's basically the market telling you, okay, it could be oversold. Let's move the price back up. You know, it's all about how many people are investing and what price is justified for them. But anyways, here, this is a little tough right now for Snapchat. We see that it's not oversold. It's around 49, which is a good section to purchase a stock, right? We see the MACD, it lost a lot of momentum, but it's starting to increase again, and hopefully we'll get in the green for a nice bullish movement. But this is Snapchat. Snapchat hasn't had profitable a year. If you look at the financials for quite some time, they're basically competing against TikTok right now. So, I mean, that can be a big competitor. Not only that Snapchat has to deal with, but it can actually hurt their user retention. Anyways, let's not get into all that. But so now back to the simple moving averages. So basically, when the simple moving average, all the simple moving averages are below the trend, we usually see that the price increases, and vice versa. When the price is below the simple moving averages, we're seeing a decrease in prices. Now, what we want to find here is basically where these where these simple moving averages will cross, because not only did we see divergence here, now this is the point where I brought up earlier. You want to use these indicators together to form a better opinion. So we see some divergence here, which is great. Later, if we zoom into this section right here, we see that simple moving averages, the 20 and the 50, has crossed before that pop in price, leaving a gap there that usually do tend to get filled, but we'll put that aside. They crossed right here. So if you would have bought there, you would have made 34% in probably a week, or not counting 7 days in a week, probably 2 weeks. Anyways, so that's right there a good indication that the stock is going to increase in value. Maybe invest quarter of your position, maybe even half, and then as you see prices increasing, buy more. And now if we look at this time frame right here, we see that the stock is oversold, right? We have this highlighted here, it's oversold, which is another indicator that the stock is going to go up. So with 3 indicators telling us bullish on this stock, we can therefore go and enter a position on this trade.
and profit whatever we're comfortable with profiting. Let's say it was 34%, that's what you're looking for, you take it. Or if you're trading options, that'd be a different story. But basically, this is what I use for my swing trading strategy. I use the simple moving averages, 3 of them, 20-day, 50-day, and the 200-day. The 20 is the green, the 50 is the blue, and the 200-day is the red line. And the RSI shows me if stocks are overbought or oversold. You always want to short. I mean, if a stock is extremely overbought, you want to short that stock so you can profit on the downside, because that's going to correct to a price that the market is comfortable with. The MACD shows you signs of divergence, where like if you use it to basically identify where a stock is going to reverse from a downtrend, as we see here, that's great, because that way you can profit quite a bit. But basically those are the indicators that I basically use. Day trading is different, but these are the indicators that I use for swing trading.
Guys, I hope you guys enjoyed that video. I try to break down exactly, what I do when looking at these indicators: the RSI, the MACD, the simple moving averages, and just the 1-year, 1-day chart to swing trade. Now, if you're more of a short-term swing trader, so a couple weeks, maybe even less, the monthly chart or the weekly chart is a good chart to look at. But my trades sometimes last 2-3 weeks. I try not to go to 4 weeks because that's just leaving my money in the markets for too long. I'm not comfortable with that. But that's basically what I do to analyze a good swing trade. And I hope you guys got some value out of this video. If you guys like this video, please give this video a thumbs up. Consider subscribing and turning on that notification bell so you're notified when I upload new videos. And if you want me to analyze a certain stock, just comment down below the ticker symbol and I can do some technical analysis and see if you agree with what I say. And if not, comment down below and tell me what you disagree with and what I could have analyzed better, as we are all trying to improve our strategies and grow as a community on this platform. So basically that's the video for today. I hope you guys have a good one, and I'll see you guys on the next one. Peace, guys.